Senator Bond, you're one of the 100 people who will be voting on that financial regulatory reform. Do you think that the bill is the proper bill and that it will be able to prevent some of these extreme situations in the future?
Not yet, Becky, but Mr. Buffett, I agree with you. We saw a situation where they all get better looking at closing time in the housing market, but the housing market was a team effort. The administrations, both Republican and Democrat and Congress, pushed for no down payment home loans, non-recourse loans. That was an invitation for disaster. There were a few of us who fought against it unsuccessfully, but there are certain bad practices that really should be stopped, and I think you're totally right. There needs to be regulation of liquidity. There needs to be regulation of some of these devices. And, the computer game derivatives that are not based in reality, I think deserve to be covered. But I know you have spoken out about the end users who in the heartland where you and I live,
sure,
who have to hedge their risk, whether they're farmers, manufacturers, transportation companies. How should we distinguish between the legitimate hedging activities, even financial institutions, and the gambling derivatives, which you have decried in the past as weapons of mass destruction?
Yeah, but distinguishing it's really tough. I mean, but it's a job that has to be done, because you talk about end users. I read an article in Business Week a couple of weeks ago about Anheuser-Busch in your state of Missouri, and they use them for hedging purposes. We're on the Burlington Northern Santa Fe right now. We use them for hedging purposes with diesel fuel, and to the extent that people like Anheuser-Busch or Burlington Northern, for example, have to put up a lot of collateral, that is money that is not being used in their own business. I mean, it's being deposited, back in Wall Street. So I think it is very important to have something that makes sure that end users aren't put in the same category as casino operators.
Well, I know you have a utility, and I've talked to a regional utility in my state that has $100 million in derivatives every day to hedge the cost
Sure.
of the energy inputs. And if they had to clear it, it would cost them $1 billion. And the ratepayers would pay that.
And sure, Senator, if they put the money up there, that money is not being used to build wind farms. So there are hundreds of end users that have signed on to an appeal to make sure they aren't put in the same category as people who are just basically gambling on it. I mean, you have a way that you've got bear traps out there, but that they don't catch rabbits.
Well, Sheila Bair has just said that you shouldn't have, that you can't take derivatives out of FDI's insured institutions without increasing their risk.
Mm-hmm. Yeah, Sheila Bair. Okay. Senator Bond has a question as well. Senator?
Thank you, Becky. Mr. Buffett, you talked about we're doing well unless somebody messes up, and you're right, and I agree with you. There's basic strength in the economy, but I'm very worried that the small businesses are not hiring and growing. They're worried about taxes going up. They're worried about the interest rates. And I would appreciate your view on whether we are looking at paying much higher interest rates on the debt we're running up. We just saw that advisors are saying we're going to have that governments that are running deficits are going to have to start paying higher interest rates. When are the Chinese going to start demanding significantly higher interest rates on U.S. credit, spreading high interest rates throughout the economy?
It's certainly hard. It's certainly hard to imagine deficits like we've been running, or other countries have been running, being consistent with low interest rates over time. So if you could really run deficits of 10% of GDP and not have anything bad happen, people would have figured that out a long time ago. I mean, it's too much fun to do, but there will be a price to be paid for the medicine that we used in order to break out of our panic situation with the huge deficits. And our Congress, but governments around the world are going to have to come to grips with how they bring down those deficits, or people are going to get very afraid of lending money. Who wants to lend money to somebody that is going to follow a long-term policy of running deficits of 10%. It's unsustainable over time. And if you can borrow in your own money, what you have is you sow the seeds of terrific inflation down the road. And if you borrow in other currencies, eventually people quit lending you money.
Well, that message needs to go to the administration as well as Congress, and I hope they'll listen to you.
I believe. And Joe, we'll send it back to you in the studio.
Very good. All right. Thank you, Becky. All right, Senator, we've got some time. You've heard Mr. Buffett talk a lot about what we need to do. Any final closing comments on that?
Well, lots of good thoughts he had, but when he talks about us spending 25% of GDP, we used to spend 18 to 20%. We need to cut that spending, and it needs to start with the administration and Congress. And frankly, when he talks about taxing overseas, we're the only country that does that. We haven't taken any steps to open up free trade with Korea, Colombia, or our Asian partners. We need to do that. We can't tax exports. We can't tax foreign investment. That's where we're falling short. And raising taxes or keeping taxes high will stifle the job-creating engine, which is small business. We showed that after 2003. We need a dose of that now. I'd like to engage Mr. Buffett in a discussion about that sometime in the future.
Yep. All right. Well, it was great having you today.
Good to be with
Senator.
you.
Thanks very much, Melissa. Thanks for joining us today.
Yep. My pleasure.